Welcome, ladies and gentlemen. Within this video I would like to take a step back and give you a nice overview of the market manipulation, how it is conducted, what the evidence is, etc. And I think it's a good idea to start with this example. You may have heard about FX Concepts. FX Concepts was one of the world's biggest and oldest FX hedge funds. At one point they had over 14 billion under management. And they performed well. Then suddenly in 2013 they went bankrupt. The knowledge of the fund was sold for 7.5 million, and John Taylor, the CIO, guaranteed personally 5 million out of the 35 million debt. So the question is, what happened here? And I'm confident that I can give a pretty good answer to that particular question, because as a matter of fact, in the last 15 years fundamental things have changed in the foreign exchange markets. And it's all in front of your eyes, even though you may not be aware of it. So first I would like to show you a collection of newspaper articles. Global banks admit guilt in Forex probe, fined nearly $6 billion. 4 major banks pleaded guilty on Wednesday to trying to manipulate the foreign exchange rates, and with others who fined $6 billion in another settlement. So first arrest in Forex scandal, former RBS trader held on suspicion of rigging 3.5 trillion foreign exchange market. Big banks are fined 4.25 billion in inquiry into currency rigging. Germany's financial watchdog worried over scale of Forex manipulation. Okay, so it's all actually in front of your eyes. And when you Google the term market manipulation, this is what Wikipedia tells you. The Forex scandal is a financial scandal that involves the revelation and subsequent investigation that banks colluded for at least a decade to manipulate exchange rates for their own financial gain. At least 15 banks disclosed investigations by regulators, and fired some 40 Forex employees. Reuters reported hundreds of traders around the world could be implicated in the scandal. And then this newspaper even shows you the cartel chat room, the name of the individual traders, the banks, and how they interacted. So this should already make you think. And if you still have doubts, okay, then let's do the next thing. Let's look what the US Department of Justice has to say about it. Here's the link, and it cannot be any clearer. 5 major banks have agreed to plead guilty to felony charges. They have agreed to plead guilty to conspire to manipulate the price of US dollars and euros exchanged in the foreign currency exchange spot market. The banks have agreed to pay criminal fines totaling more than $2.5 billion. The penalty these banks will now pay is fitting considering the long-running and egregious nature of their anti-competitive conduct. The charged conspiracy fixed the US dollar-euro exchange rate, affecting currencies that are at the heart of international commerce and undermining the integrity and the competitiveness of foreign exchange markets, which account for hundreds of billions of dollars worth of transactions every day, said Assistant Attorney General Baer. Okay, so if you still do not believe it, I mean, come on. This statement it was made by the US Department of Justice. Please go to the link and read it yourself. Okay, it is proven. So if your conscious level is so low that you do not believe that these markets are highly manipulated, you do not know what's going on. And then the question is, okay, what do the banks, for example, say about this? And I can also give you a hint what's going on. Like, this is an example, So this is a statement about JP Morgan. To begin, conduct by certain individuals has fallen short of the firm's expectations. The conduct underlying the criminal antitrust charge by the Department of Justice is unacceptable. Moreover, as described in our November settlement with the UK regulator. Blah, blah. So basically, to make a long story short, my theory is the following, and for me this is basically proven. So the system works as such. The manipulation leads to very, very high profits for the manipulators. But every 4, 5, 6 years, these manipulators pay fines in the size of billions to the regulators. They fire the traders and say, well, these traders did it on their own account. They did it as individuals. However, most likely they pay them off beforehand. So then after these guys left the banks, they hire the new traders and they continue the game. The game is just too profitable to stop it. So in other words, it will always go on like this. So every few years they pay the fines, they make much more out of the manipulation, so it's worth it. They just replace the individual traders. Everybody's happy. The regulator made money, the banks can continue, and the dumb money is victim of all this. And it's also not difficult to understand how exactly this is implemented. Okay. For example, if you on the dumb money side want to have access to an order book, there are different services you can buy. You can see some of the orders. But first of all, since Forex is decentralized, as I say, this does never represent the complete market. But most importantly, and that's what many people do not understand, these market manipulators collude. Okay? They do not trade against each other. They would be worse off trading against each other. Look up the prisoner's dilemma. So what they do is they trade together, and they do so via using dark pools. Dark pools are unregulated parallel markets. Yeah, only these players have access to these, and it's not difficult to see that they use those markets in order to coordinate their algorithms. It's all automated, of course, and they make sure that they trade on the same side, so to speak. While the dumb money has no clue how the market structure looks like. Yeah, the only thing both can see is the price, and the price doesn't tell you much. So the next question is, okay, who are the players? Well, we have the investment banks, the market makers. We have also central banks, we have corporates, we have all kinds of funds, we have hedge funds, we have private traders, and we have the smart money funds. And what people don't know is that on the dumb money side, the biggest group is made of by corporates. Okay, we're not talking about retail traders. Retail traders make up a tiny percentage of the market. And corporates, they do not want any currency risk. So if there's a big company selling washing machines to the US and they operate in Europe and they get income in US dollars, they want to change it in euros, they do not want the risk of the fluctuation of the currency, so they may place big orders in the market in order to hedge themselves, for example. And from their perspective, they think it's random whether they lose or win on the hedge. However, I can guarantee you, if these guys would make an analysis of, let's say, 15, 20 years, they would find that overall they lost on the hedging activities. Okay, but they're not aware of this. So it's important to remember that those big orders which are entered in the market, they were not entered in order to make a profit. Okay? So to some degree, there is not even a conflict of interest, so to speak. But of course, who wants to lose money in the markets? Yeah. But I think you get the hang of it. Now, I should also emphasize that the dumb money is not stupid. Okay, the dumb money just has less information, and that's the problem. Okay, they place positions in the market, they place stop orders in the market, etc. But then they fall victim to the manipulation, such as stop runs, position runs, and all the other things which I show. So these are very, very important things to understand. And as I will explain in the end, this manipulation may even be necessary. Okay, but we'll come to that. Okay, you may say, well, wait a second. And, you know, it could be any name of any of the banks. It's not only particularly them, of course. But actually there are services which allow me to see investment bank trades. Well, if you used such a service, you may have realized that, you know, these are not very great trades, and they also lose a lot of money. And the reason is the following, and that's what many people do not understand. The reason is that if you're talking about an investment bank is not an investment bank because it has different parts. Okay, there is a research part, there is a sales and trading, there's investment banking operations, and then there are teams within the bank. And what I'm showing you here is conducted by what's often called algorithmic trading. Okay, and these guys have nothing to do with, for example, asset managers who manually manage portfolios for clients. They don't have a clue what's going on either. So they are part of the dumb money. You understand that? Apart from the fact there are different separations, such as Chinese walls between M&A and trading and these kind of things. There are business-driven separations within the bank, and there are different teams even competing internally for bonuses, etc. But it's important to understand that what I'm showing here is done by the people who have very specialized knowledge. There's a very small team of them. They are not the guys running around on the big trading floors talking to clients. Okay. So it all comes down to an alpha poker game, yeah. And the smart money, they can see your cards, and they can also decide what's the next card on the table. They have full ability to move the price where they want. And I'm not talking about a peripheral phenomena. Yeah, they do that every single minute. Yeah, they can move the price, and they do that. The price is in their complete control, whether they believe it or not. But if you watched some of the videos I posted, all the live trading videos I posted over 1.5 years, you observed how it works, you know exactly what I mean. This is just your reminder for the ones who still don't get it, so to say. And I should also say, I mean, myself, I went through an academic training over many years, but academics tend to not have any clue what's going on. They think it's all about supply and demand, and it couldn't be more incorrect. And they talk about whether markets are efficient or not, yeah, whether they are random or not. First of all, they're not random, okay, and these guys, they're on a completely wrong track. They're not aware of the manipulation. They don't have any experiences. They never trade in their lives neither. So these guys are writing academic papers and getting prices for something which is completely incorrect and doesn't describe the actual reality at all. So to summarize, the market is completely manipulated. Also watch the other videos, and it goes against the tenets of academic theory and common knowledge. Of course, the manipulation as such is illegal. However, let me say the following in all fairness. First of all, since we have those kinds of markets, they were always manipulated, okay? I remind you of the front-running practices. So in the 80s, it was common that, you know, brokers would get called some clients. They knew which stocks these clients wanted to buy, for example, and they would fill their own trades before the client's trades. At some point, this was made illegal, and the regulators went against it, and they just changed the game. Then there was a long time of some kind of insider trading, and then this was regulated, and the regulators took hold of it. And what we see now here is algorithmic. This is the situation we have in our time. But think about it. If a market maker offers you to decide whether you buy or sell, when you buy and sell, how much you want to buy and sell, and he offers you to do so at very low transaction costs, yeah, with 0.2, 0.3 pips for trading euro dollar, with the high liquidity of the market, with low commissions, etc. Of course, first of all, who would offer you this option and then take the full price risk on the other side? Some people may say, wait, they hedge themselves, but as you know, there are no perfect hedges. Yeah, so this is a simplistic answer which doesn't cover the whole mechanics. Of course, the market makers have some price moving abilities, and as I show and demonstrate and proof, there are certain dynamics and to it, and there is a certain strategy they use in order to make sure that everybody loses and they win. But the markets would never be so deep, so liquid, so cheap to trade if they wouldn't, you know, have these kind of advantages. And also remember, there are some players who are not even in the market to make profits on speculation. Yeah. And also remember that the broker manipulation I showed in other videos, it comes on top of what I'm showing here, okay? I'm not talking about the fact that some brokers move away from the actual market price and do price bags against clients. Look, my video where I recorded this live. I'm not talking about the fact that brokers manipulate slippage against you. I'm not talking about the fact that brokers manipulate the spread against you, that they do all kinds of tricks, platform freezes, etc. This comes on top. I'm talking about the inherent manipulation of the financial prices, okay? And of course, dark pools play a big role, and I should also mention that the actual entities conducting this manipulation and pocketing the big profits, they are most likely separated from, for example, investment banks. structurally, but so they are connected to them, but they are not officially part of the firm. Otherwise, these profits would appear on the balance sheet of the bank, and people would think, okay, what's going on? And of course, at the end, they just benefit from the informational advantage as well as from the ability to be able to move prices. And it's quite fascinating that they succeed in making everybody lose, because most people think, wait, somebody must win. So if there are people buying, people selling, and they're short-term, middle-term, long-term traders, they do all kinds of strategies, reversals, breakouts, trends, scalping. Somebody must win, and the answer is, well, of course, otherwise the market would never move. However, as I will show, they do it in a way that all the groups eventually lose. Of course, sometimes in the short term, a few groups are led into profit, but that's about it. So no style or system will be allowed to make consistent profits. Be aware of this. If you're somebody who tries to apply simple trading systems to the market, it won't work. And yeah, I should also emphasize, the dumb money is not dumb. Yeah, they just have less information. There are smart people there. Yeah, they do everything they can, but still it's not enough to cope with the high degree of manipulation which the smart money players implement day by day. And of course, the topics such as emotions, trading psychology comes on top, okay? But even if you would have a perfect mindset, okay, you still have no great odds in your favor, because apart from them, even if you would not be subject to the broker manipulation, even then, if you fulfill those two requirements, you still would fall victim to their games eventually. And there are various meta levels. They're highly important. Do not think that you can live trade any of this knowledge just by being a bit aware of certain aspects and knowing a bit. That's by far not sufficient. I do not recommend you this. Yeah. Only after you understand everything, you did your homework, you invested the research, the time, and you bothered to actually understand everything here, then you should even think about, doing any trades. But without that, you will have no chance. You will fail. So to summarize, this gentleman would have done well by knowing all these things. My theory is that his hedge fund fell victim to the fact that the markets changed, especially in the last 15 years. Yeah, we switched to completely algorithmic times, and funds like these, they're not part of the smart money. Look, for decades, these guys, they have a whole team of analysts, okay, each of them is working on fundamental analysis, technical analysis, on strategies. They test a lot, they do back testing, forward testing, they do all kinds of things. And then they did well over a long time, and suddenly, they fail, and they can't, deliver good returns anymore. Well, if they would know how the market actually works these days, they would have known what's going on. Okay, so they fell victim because they ended up eventually on the dumb money side. No matter which kind of trades they entered, they were detected by the smart money algos, and the smart money algos would place their positions into loss. They would conduct stop runs against them, etc., etc., etc. John Taylor, if you see this, try to contact me, or if anybody has a connection to him, you're welcome to contact me. Okay, I hope that you understand these points, and this was a nice summary, and I hope that people who are at the low conscious level finally understand what's going on. I showed you nice evidence. I showed you official statements by regulators, the Department of Justice, etc. It's all in front of your eyes. If you are one of these people who is very naive and believes that, markets are random 50-50, there's a fair chance to win, you do not know what's going on. You live in a dream world, and I can only advise you to be very, very careful. Stay safe, and all the best.